How to find and trade stocks that gap up 100 or 1,000%. The US stock market has been hitting new all-time highs in the past couple of weeks. The S&P 500 is on multiple months of bullish trend, and we've been seeing many small-cap stocks that surged hundreds or even thousands of percent in a single day, such as BMR, Holo, and DTSS. In this video, I'm going to share with you how to find and trade short squeezes before they go to the moon. It really is a great time to be trading, and an even better time for new traders to get started. However, I'm sure a lot of you are wondering, how exactly do you find these profitable trading opportunities in this market? This year so far, we've been very blessed with multiple crazy runners in a single week, providing us so much opportunities. But in order to be profitable as a trader, you need to know how to choose the right kind of stocks to trade, and most important of all, how to recognize a repeatable pattern. I'm sure many of you eventually want to master entries and exits for your strategies, so you can rinse and repeat. To do so, you must be able to recognize chart patterns and setups. There's no other way around it. Maybe the only other way is to smash the like button and make it rain Lamborghinis. In this video, I'll use my own trade examples to explain a repeatable process that you can learn to find and trade the hottest stocks in the market. You are going to learn the short squeeze chart pattern and how you can find the pattern early on, the pre-market criteria I use to find the right kind of stocks to trade, why trader psychology, news catalysts, and technical analysis are all closely related, and how I determine whether to go long or short a stock based on my criteria. And the best part is that I have both winning and losing examples to show you later in the video, so you can learn from the ideal and the losing scenarios. As you know, no strategy out there works 100% of the time. But if you have one though, let me know. Let's begin with everyone's favorite, the short squeeze chart pattern. Every other day in the stock market, there's news or press release that drives a company's stock price to gap up significantly during pre-market hours. And sometimes these runners can gap up a lot even without news. Short sellers tend to pay attention to the stocks with the highest percentage increase, also known as the top gainers. And most of the time, these top gainers are low-float, small-cap stocks from smaller companies with very weak fundamentals. Not only do they not have good financial statements to show, their news catalysts are probably ambiguous or sometimes recycled from the past. These kind of stocks can easily get overcrowded with short sellers, especially when the shares to short are easy to borrow or cheap to borrow. As short selling has become so popular nowadays, you've probably noticed a lot more short squeezes on these kind of small cap, low float stocks, especially the ones with poor fundamentals. And in terms of price action, you can identify the price levels where short sellers are most likely trapped by looking at where the stock's consolidating, usually multiple times. Let's start with looking at this really fun stock, Holo. You can see this huge parabolic daily chart here. The stock came from about $4, came all the way to 20s, broke above the 42s, 50s, and close to $100. You can see it's been through multiple days of massive short squeezes recently with no actual news. Whenever you see a small cap stock that's a top gainer on the day with no actual news, it's very tempting for short sellers. Now, I want to show you how you can identify a potential short squeeze chart pattern before it happens. So let's take a look at the first day this thing gapped up. By the way, with no news, okay? On this particular day, when the stock went from over $4 to close to $15 at the end of the day, you can see, just looking at the intraday charts here, you can see pre-market, this thing started gaining some traction in terms of volume into the open. Now, pre-market high is this 390 mark, okay, on the stock. A lot of times that pre-market highs is going to be the first sign of a bullish strength if the stock is able to break above it and hold and continue trending up. Now you can see the stock did exactly that, broke above that 390s pre-market at around 950s and never looked back. Create higher lows and higher highs. So besides the uptrend, another key you can identify here is that it never actually created any drastic sell-off. It just kept on holding that steady 5-minute trend. This is a 5-minute chart. You can see it keeps on making steady, slow new highs, pulled back, but you're holding this really, really distinct uptrend the entire day. If you line up this line, all the lows from this lower day all the way to in the middle to the afternoon, it's a very clear uptrend. I think what's even more dangerous, of course, now we're reviewing this in hindsight, but you can learn all of these bits and pieces for next time, is that the stock was relatively easy to borrow. There was a lot of locates available for short sellers, and they were extremely cheap as well, some for less than 1 cent per share. So a lot of times you can see this is how they get you. The stocks just steadily uptrend all day, no drastic pullback. So that means none of the short sellers were kind of let out. They just kept on adding as the stock broke through multiple daily resistance levels. You can see stock broke through that 770s, 10s, and $12 and never had a huge pullback. So you know this thing is piled on with short sellers. So we just talked about the pre-market highs key level. That's going to be the first important key level for you to identify potential short squeezes. Now the next level to remember is the previous day's highs. For small cap stocks, I've identified this pattern again and again. Whenever it breaks through the previous day's higher day, whether it's a spike or a clear breakout, you usually get huge volume coming in. You know, a lot of short sellers getting squeezed out, new buyers, breakout buyers coming in to buy. A lot of times that's where you get a huge spike after the break of the previous day's higher day. So you can see the exact same thing here. After this thing kind of pulled back a couple of days on the daily charts, you can see it formed that huge spike on the daily charts here. 40, 90s, just call it 41. Now, this huge breakout day where the stock broke through $41 and went close to $100, that happened when that $41 level, this day's higher day and this day's higher day lines up with this particular day's pre-market highs. You can see right here, pre-market highs is trading near that $41 level. And at the open, pretty much once this thing clears through that $41, then you have a huge VWAP hug. You can see stock consolidated around this VWAP area, and then you get a huge squeeze to $95. Recognizing this chart pattern is almost an essential skill that most day traders need to have, especially if you're trading price action. If you're a long bias trader, you want to spot the short trap consolidation and size in to maximize the potential return of your winning trades. So again, 2 key levels to keep in mind: pre-market highs and the previous day's higher day. So my own trade on Hollow that I do want to go over actually happens on the second day of this huge gap up. You can see the stock actually gapped up after that $12 broke out, went all the way to that $41 key level we talked about, pulled back and started consolidating pre-market. This is where I got long pre-market, thinking that we're going to test that $41 higher day and continue to new highs. This kind of chart pattern is actually one of my favorite to go long, sometimes pre-market, after seeing a lot of shorts have been trapped either previously or the day before. So that's the reason I got in at $30 pre-market on day 2 of the move. Because I saw that day 1, a lot of shorts are still trapped. Sure, a lot of people got let out after hours, causing a huge squeeze. But I think pre-market, it looked like it was consolidating for another squeeze move. And you can see I was only about half correct on that thesis. You can see pre-market, we did consolidate around a lot of higher lows pre-market, holding at 25.60s. And especially if you can see that $30 channel here. Once this level keeps on holding for a couple of times, I did get in around $30, thinking we're gonna test that 41s again, which yes, we did. But right after we spiked to that $41 level, we immediately sold off, and it was actually halted down multiple times. So as you can see from my execution chart, I did sell some into that $41 spike, but I was really trying to hold at least half of it for a much bigger move to the upside. So just keep in mind, whether you are trading this short squeeze chart pattern on the first day or the second day like I did, or pre-market, the key is to identify whether there's enough shorts that's trapped inside the stock that can help you squeeze the stock even higher. And that's the reason I didn't go short on the second day. I've noticed that a lot of these low float runners are going up for 3, 4, 5 days straight before the eventual unwind. So it's actually a very dangerous time to go short selling too early on. Remember, you gotta adapt, right? If it's too early to short, not ideal to short, then go long until it's suitable for short selling. So here on the screen, I have a few more chart examples for you if you want to practice and familiarize yourself with this specific short squeeze chart pattern. And my recommendation is to use the 1 minute or 2 minute intraday chart. Did you know you can get up to $6,000 worth of premium trading tools all for free? As part of the new promo from Centerpoint Securities, you can now open a new trading account and access Trade Idea Scanner, which is my favorite scanner by the way, Benzinga Pro, TrendSpider, and Dilution Tracker. They're also offering you free commissions for 60 days and 3 months free of DashTrader Pro trading platform. I've been using Centerpoint Securities for active day trading and short selling for many years now. So I'm very excited to share this amazing promotion with you guys. They are now available in Canada as well. So feel free to check out the promotions down below. Now let's get back to the video. Besides technical analysis and chart pattern, a key component of a good trading strategy is a stock selection criteria. This is especially true for small cap stocks. You must learn how to choose the right kind of stocks to trade with your strategy. Do you remember these video interviews I've done with millionaire day traders? Many of them talked about tracking and analyzing stock statistics such as volume, float, initial market cap, range, percentages, and so much more. You may not like numbers, and that's okay because I definitely don't. But you should at least have a general idea of what kind of stocks you should be trading with your setup. Don't worry, I'm gonna give you a cheat sheet to help you find stocks that could potentially squeeze and run hundreds of %. And I'm not gonna charge you $10 for the secret stock criteria recipe. All I'm asking for is a gentle tap on the like button. Fundamentally, we're looking for low float small cap stocks with fresh news catalyst, ideally one that's gone on with the current theme. For example, AI, artificial intelligence, has been very hot lately. So a lot of small cap stocks that's related to that category are likely going to run. So you're gonna want to scan for stocks with a market cap that's below 1 billion. Remember, you're looking for small cap stocks. So if you look at my configuration, you can see that I'm looking for stocks below 1 billion market cap with no minimum filter. And for volume, you want to see at least 1 million shares traded pre-market. It's okay to scan for a little bit lower, like I did, only 20,000. But again, when I'm actually choosing a stock to trade, I want to trade these ones that have over 1 million shares traded. And as for float, I want to make sure ideally I have something lower than 10 million to ensure that it has the range to go and can create a lot of volatility. So besides market cap, volume, and float, the next important thing is to look for gap up percentage. Now, this really depends on the cycle of small cap stocks that we're in. Currently, we're seeing a lot of stocks gapping up above 80%, 90%, and even hundreds of %. So you can see on the scanner right now, you're seeing some stocks gapping up above 90%. Yesterday, we had 200% gainers. Now that's the current hot cycle we're in. So as long as you set a filter for a minimum of 20%, you should be pretty good for small cap stocks. Next, I do have a golden tip for you guys, and take note. You should also have a way to check whether the stock is easy to borrow or hard to borrow. Remember earlier we talked about the reason a lot of these small cap stocks can trap a lot and then squeeze up higher is because there's a lot of shorts available to borrow for the short sellers. So that means if a stock is easy to borrow or cheap to borrow and it's trading a lot of volume and has really low float, there's a good chance that the stock could keep on squeezing up higher. Again, it's not guaranteed, but it's a very good indicator to look for. Now, in terms of how to check whether a stock is easy to borrow or hard to borrow, and the cost that's the reason a lot of pro traders have multiple brokerage accounts. That's number one. Number two is being in a trading community. It's very easy to check, hey, how much is ABC costing at brokerage A, B, C? You can compare and contrast very easily. A simple way to check is also on the actual trading platform. So you can see this is Dash Trader. That's the one I use with Centerpoint Securities. If you look at the montage window, if you have HTB, that means the stock is hard to borrow. Then you have to actually go into locate window and look at how much the cost is per share. Now, if you look at this stock, NVIDIA, S over here, that means it's easy to borrow, means it's free to borrow, essentially. So those are the few simple ways you can use to check whether a stock is easy to borrow or hard to borrow, and what are the likelihood of these low float stocks squeezing up higher. And the premium scanner I used earlier is Trade Ideas. If you're interested in copying these tools, you can use my link in the description below for discount, and you can download my settings as well. For newer traders, there's also a lot of free scanners and news research tools. I put together all of these best free trading tools in this video over here. Now that you've learned how to recognize a highly repeatable short squeeze pattern and how to find this kind of stocks yourself, it is now up to you to internalize what you learned and create an entry and exit strategy that works for you. That's why the next topic I want to talk about is knowing the best entry timing and market environment for your strategies. I'm going to use my own trading style for your reference. I have a few sets of trading strategies, and some traders will call them different playbooks. When it comes to trading small cap gappers, I also have a strategy that focuses on short selling the stock on the day it gaps up. Now, you might be wondering, why didn't I short sell hollow? So the key differentiator for me to decide whether to go long or short or avoid the small cap gapper, it's no longer about the catalyst. That used to be the case prior to 2023. But nowadays, as you can see, we have runners with no news flying to the moon. Now, the main differentiator I look for when deciding to go long or to go short is number one, whether there's a lot of shorts already trapped in the stock, and number two, does the daily time frame show a bag holder daily chart? Again, we're talking about pattern recognition and trader psychology behind the technical patterns. So let me explain this bag holder daily chart pattern to you using this particular stock, DTSS. So this is the daily chart of DTSS, the stock in question here. And the day I traded it is this particular day, over here, February 14th. I spent it with my favorite Valentine, the stock market. Anyways, you can see the reason I'm more short biased on the stock is the long-term downtrend it's had. You can see this is actually the stock I've traded many times in the past. It's always a pump and dump. It's very apparent for the daily chart. You can see stock gaps up, sells off over here as well. This is back in like 2021. Gaps up, sells off a lot of times. You can see this here in particular here, spike and sold off over here as well and here. So This is what we call a long-term downtrending daily chart. The stock, I forgot to mention, the stock also did multiple reverse splits in order to prop the share prices up. And whenever you have something like this, long-term downtrending, multiple reverse splits, and that's where you have a lot of bag holders holding the stock. Bag holders are basically people who have bought the stock high and refusing to cut losses. So I'm sure there's a lot of people who are holding the stock at $40, $51 and above. And again, once again, the pattern recognition theme comes back again and again, whether you're long biased or short biased like this one. The stock, I've seen this break out and sell off the entire gains many times in the last 8-9 years of my trading career. So that creates a natural bias for the stock. Now, that doesn't mean I'm guaranteed to make money on the stock despite knowing the bag holder short selling strategy. Yeah, because long story short, I actually lost money on the stock. What happened is I was actually way too early. You see, DTSS, despite the long-term bag holder chart, despite all the failed breakouts, there's one thing it does really well. When it squeezes, because everyone's so short biased, because the float is so low, it's only 1 million shares float, and despite the fact that there's no catalyst for the run, it can still squeeze from $6, as you can see on the intraday chart, all the way to $20. So I definitely got squeezed. I want to use my losing trade on DTSS to show you the importance of choosing the right kind of stocks to trade for your particular setup, and more importantly, knowing the right timing and ideal market environment for your particular strategy. When I was shorting DTSS last week, that was when all the low flow stocks, whether there's news or not, was flying to the moon. Everything was going 200, 300, 400%. So that was a market favoring the longs. I definitely jumped the gun way too soon on the short side. Again, there's always a lesson to be learned. This loss, I think about $3,000, $4,000 loss, is relatively small percentage of my trading account. But without proper risk management, this could have gone really, really badly. So as promised, we went over both my winning trades and the losing trades on this topic of short squeeze, chart pattern recognition, and stock selection. Once again, the only way to achieve consistency in trading is to find a pattern that's repeatable and to choose the right market for your particular strategy. I have made so many videos teaching different trading strategies, but it's truly your job to go through the process of learning and finding what works best for you. And remember, practice makes perfect. You need to be looking for these chart patterns every single day, saving the charts and reviewing them. Don't forget to comment down below if you have any questions about trading or recognizing short squeeze chart patterns in general. And let me know if you want to see more videos on this particular topic. It's definitely very interesting as we see more and more small cap runners. You can watch more technical analysis and trading strategy tutorials on this playlist. Also, I recommend watching the Humble Traders podcast, where you can learn from the experience of other successful traders. Thank you guys so much for watching as always. I'll see you in the next video.